Good evening. I'm Epstein with your SPDR-ETF stock market wrap-up, and this is earnings season, and it is Monday, the 22nd of January, 2024. Sorry I couldn't put out your weekend updates. Other things came up and just couldn't get to them. But let's talk about where we're at. It's earnings season. Tomorrow's a huge day for Nikki Haley. Where's she going? Is she going to really be a runner against Trump, or is it game over already? We'll find out. You saw Ron DeSantis over the weekend threw in the towel. He wanted to do that in front of the New Hampshire primary. Some people think that'll benefit ex-President Trump. Some people think it'll help Ms. Haley because now he's out of the game. Where do those votes go? So you've really narrowed the field down. And of course, then not too far away, we have another set coming up, the Carolinas, and we'll find out where that is. But if Ms. Haley doesn't do well tomorrow, they might put all the spins they want on it, but I'd call the contest over. I think you're then into the Trump-Biden pool. If she does well, I think there's a number of people, if she does well, that'll say, you know something, maybe I've got to really take a look at this person because there's too much drama with ex-President Trump. There's always something going on, and maybe she's another choice. Other people like the drama, and this is the guy that they want. Other people love his policies, and this is the guy they want. So we'll see. It's getting to be very interesting. It's earnings, and we're going to get bank earnings. Well, we got a bunch of those. I said that wrong. We're going to get Netflix tomorrow. We have the big boys coming up. We have housing coming up. I'm really interested in what the housing looks like. You know, one of the stocks that we haven't covered here, and I think it's time we do, is D.R. Horton, one of the nation's largest, if not the largest builder. And you're looking to see just what they're doing through there. And they have been a real mishmash. If you take away today's rally to a new high for it, you came up, you had corrections. It's not a real clean type trading chart. It's a market that runs in streaks. Example, boom, and then all of a sudden, back and forth. But what it did do is, what number did it hold? I called this red line the line in the sand. It's the 18-day moving average of closes. Now, you may use the 20, you may use the 21. I don't know what you use. I know what I use. And the 18-day moving average of closes, to me, is the line in the sand. Markets like to test it, and from that number, decide what they're doing. I see this over and over in futures, spiders, ETFs, stocks. I've done this since high school, trying different moving averages. I used to buy services, trying different moving averages, and I've come to the conclusion, for me, this is the one that I think does the best job, universally, by the way. Can you take a average and make it fit better? Well, you can do anything you want, right? So I'm sure that you could within a period of time, but it won't stand the test of time is what I'm discovering. I remember we used to buy services. There were people on the trading floor. I'm going back to the CME. And the board of trade. And they would sell their services. These are the averages you're doing today. These are the pivot numbers. This is where your resistance is going to be, your support's going to be, and the guys in the pits would pay up for this. They'd run and get their numbers in the morning, and you could just see what they were doing because one guy buy it and he's telling you what the other guy would do, what it's saying. And, you'd have an idea what's going on there. I hated the trading pits. I know people would love them, but it was bluff poker at its finest, all right? You want to buy, and you come in and you're going to buy 10 contracts. The guy next to you offers 500. I mean, you shrink. What don't I know? What does he know? Once you get off the floor, I always said this, I think you're a better trader and the floor is gone, so it doesn't matter anymore. But that's what it was, and I was brought up in that arena. Higher high, lower low, you can see where the market's sitting right here. So I see that, how could you say that the market's not in a bull trend? It's a new high. However, in terms of an easy trading vehicle, it isn't. I wish I could say it is. Bollinger Band works fairly well in this chart of holding back or forming the basis to bounce away from. You see this over and over on it, all right? Is it one of my favorite charts? Definitely not, so I don't mind telling you that. You're overbought. You're at a Bollinger Band. You're going into earnings. What are the odds of staying over the Bollinger Band? 5% of the time. So not in love with it. In uranium, CCJ, the Cameco, you're coming down, and I'll look for big support to be found again at the 18-day average. The trend is down, but the bias is up. Bias is defined by the relationship of price to the 18-day average of closes. So it's a correction, not a change of the overall bias of the market. In UGA, be very careful. You have just challenged today the 200-day average, the 100, and the upper Bollinger Band, and you're overbought. For a guy like me, if you were sitting next to me and I'd have this beautiful elbow, I'd kick it, and I'd go, are you long? And you're not doing something about that? You know, you would tell me to go F myself, and I get it. All right? As you can see in the slow stochastics, you are overbought. Overbought with that, to me, you play that. I don't want to play that. That's where smart money, in my opinion, takes money off the table. It's not even embedded. In XLF, you got a lower low, higher high. I don't see anything that you want to do there. Lower low, higher high in XLI. I don't see anything you want to do there. AMC. So, in my morning video, my subscriber video, I showed Netflix new releases going back, I think, 5 years, maybe even longer than that, okay? I think it's a bit longer than that. 2 new movie releases in theaters. There's just no comparison. But in all fairness, the amount of new movie releases has been fairly consistent in the 130 plus recently. We'll see if it does anything. I can't answer that. If you lose the embedded reading by closing over 20, I can make an argument you're going to go back to the 517 or wherever the 18-day average is. But there's something else very important. It might mean, remember I said, at first I thought we were going to fight a battle around $6 or $7 for support. I gave up on that back here. So it had to be in the $6 range. Then as we started coming down, I said, it's not going to be 5. And then I said, maybe it's 4. I think that's it. I think we have a number that the market has decided temporarily might be the life-saving number for this particular stock, and they don't want to press it under there if you lose the embedded reading. That does not mean I'm giving you an all-go, oh, I'm bullish, bullish, bullish. What I'm saying is if you lose the embedded reading, it's the first time I'm saying in a long time, I think we have a number we have to learn to respect. In RSPD, this is the S&P 500 equal weight consumer discretionary, no trend. A lot of sideways action, fighting a battle to stay under the 18-day average. Can it get over it? Even if it does, you're not trending. You have a lower and low, higher high. I don't see it there. So the consumer stocks aren't making the move yet, or the ETFs. The XHB, the home builder ETF, higher high, lower low, sort of goes with Horton, doesn't it? So that seems to be working okay. Now we get to the energy sector, and it's been bearish, but you keep your eye on this market. Suddenly the swing line today turned up with an outside day to the upside. If you haven't taken my outside day course, it's on the website under the word education, iraepstein.com under education. It's real important when you get them at these points in a chart. If you lose the embedded reading, a story's unfolding that you probably then want to get a rally that heads you back to wherever that 18-day average is. If you say embedded and you take out today's low tomorrow, that's Tuesday or Wednesday, then the odds will say this was a trap for the bulls. The guys got bullish, they'll get knocked out, and they probably go down to the Bollinger Band again. It's a crucial, crucial point in the chart. For my type of work, if you lose the embedded reading, bye-bye, Miss American Pie. In GLD, the market's in a downtrend. It's really that simple. Lower highs, lower lows. Interest rates climbing a little bit to really put it in this downtrend, but it's doing it. In industry, not good. Maybe tomorrow we'll see the Richmond Fed and some other numbers we're getting here. They're due out to do something. I saw the lagging indicators come out, the coincident indicators. 21 months in a row of slowdowns. How can anybody think industry's in a good shape? Lower highs, lower lows, still falling away here. Silver market, this was a cover area, but today was a blowout day. So the longs that we're holding in, it just looked to me like stop orders, waves of them getting hit in the futures all day, which took you down to the lower Bollinger Band. You'd been in a downtrend, oversold admittedly, but in a downtrend. And was I not saying here, you've got the videos, they're there on YouTube. I said, I'm seeing now resistance. We've gotten underneath all these key moving averages, and you went down. Is this going to be a completion of the downside? One day doesn't tell me it's done it, but my mind is open to it. Copper market, I have called China a liar the whole time. You know that. I've been very aggressive in what I've said. I really believe they're mismanaged by President Xi, his vision for the future. In terms of a Western point of view, I want to make this ultra clear. In my Western point of view, I am certain for Asian people, they may think he's the greatest thing in the world, and I respect that all the way through for what he's doing. But he's driven out Western business. Who the heck should do business in China? You want to get your product stolen, your patent stolen. Today you're doing fine. Tomorrow they come in and they tell you, hey, you've done something where we want you under house arrest. I mean, I can go on and on. It's not democracy. It's a difficult place. However, it's one of the largest countries in the world. And you can't not do business there if you're an international corporation. You just don't want to do a lot of business at risk to your business. Very important difference. But you've been coming down. Here was an outside day up, and you took that low out. That was a trap for the bull. Unfortunately, the Bollinger Band was right there. Most of the time it isn't. But you caught these people, and boom, right back down. And you got an embedded reading. I just don't see anything friendly on copper. In interest rates, again, over the weekend, I just read so many varying stories. Which one do you want to buy into? I have a hard time without labor cracking. In other words, unemployment going up, not staying 3.7, but 4.2%. That would be better. Half a percentage point might get the Fed saying, we can move, but you're not there yet. It could happen. You got 2 more jobs reports. I don't know, but I haven't seen it. I haven't seen claims going to the point where I should think labor's weakening. Yet I read reports this week, and that's the exact argument they're making. They give you all the statistics. Well, the problem I've learned with statistics is you can dig out these oddball fringe statistics for everything. It's the main number you look at, not the fringe number. Sometimes the fringe stays on the fringe. We've heard that all our lives. It's mainstream, and the mainstream numbers are still too strong. In the dollar, you're backing away, but you're embedded. Still bullish. It's not bearish on this chart, which means the euro, while it's gotten a correction, it never did embed. It just got oversold, and it gave you a bounce. There's no trend change here. It's still lower highs, lower lows. And again, you're going to hear from Miss Lagarde now on Thursday. So you want to be part of all that. Tomorrow morning, we're going to have the Bank of Japan. I'm going to be writing about it. By 11:30 in the morning, my subscribers will know what Mr. Ueda said, my take on what he's saying, how we should approach the yen. I do all that for them. How do you get it? I make it free if you've never tried it. I don't want a credit card when you try it either. You either like it or you don't, and you either run back to it or you say, I don't need this. I write in a way that's easy because I write bullets, headlines, a lot of them. I'm not as interested as you think in writing dissertations. I've taken market letters, and it would take me a half hour to get through them. Dennis Gartman had one like that all the time. And by the way, I think he was very good at what he did, but he said the same thing over and over because you can't write that much every day, put out a newsletter to do it. You can do it in bullets. You can make points, and that's what I learned, and that's what I do. And I put that out, then I back it up with charts. videos to prove the point. Then I give you trade recommendations, stops, objectives. Where is it? You get to see it all lay out. You get 2 written reports. They start 2 a day, Monday through Thursday, 1 Sunday night, 1 will be Friday, unless there's special reports, and then that's all additional to it. IraEpstein.com, free offers. Move your cursor up here, and if you give that a click, you will see it'll take you to that area. And not only take that, choose some of the others. I think you'll like what you see there. I'm Ira. I will talk to you tomorrow.